Legendary baseball personality Yogi Berra once said that when you come to the fork in the road, take it. For many decisions in life, I'd say Yogi's right. Because I think what Yogi means is that when you come to a big decision in life, flip a coin, and whatever happens, it'll all work out okay. Now, for many decisions, I agree, he's probably right. But when it comes to that important decision of what to do with your retirement savings, I'd say Yogi's advice is better off sticking to the baseball field. Fortunately for you, you chose the correct fork in the road with how to manage your risk assets and retirement savings. There are 3 primary strategies that we've already introduced you to, and by being here now, you've chosen to learn more about fact-based investing and the power of protected growth. Fact-based investing, or what we call trend analysis, seeks to identify uptrends and downtrends in overall markets and specific sectors in real time. There's no guessing, there's no predictions, we don't have a crystal ball. As trends change, our indicators will signal to us exactly what to do inside of our protected growth portfolios. The real differentiator here of trend analysis versus the old-fashioned buy, hold, and hope methodology is that you won't be sitting idly in a fixed allocation, always fully invested and exposed to risk, riding the market waves up and down, hoping it all works out one day. Instead, your investments will be actively managed based on what our indicators are telling us is going on in the markets now. Here's another way to look at this. You're headed out on a family vacation to Hawaii. Imagine there are 2 flights leaving your local airport with non-stop service to Honolulu. You can pick either. The first flight has 2 really smart engineers in the cockpit programming the autopilot route for the flight while you're boarding. Once the route's programmed, they step off the plane and let the autopilot system taxi, take off, and land the plane. So no matter what the weather brings, that plane is going to fly right through it, even if it's the storm of the century. Hopefully you'll only get rattled a whole bunch and the plane won't actually crash into the Pacific Ocean. But buckle up, because chances are it's going to be a very bumpy flight. Now, the second flight has 2 actual pilots in the cockpit. Sure, they're programming the autopilot, but after takeoff, the pilots stay in the cockpit just in case their instrument panel tells them a possible storm is on the horizon. And when that storm comes, these pilots have the expertise to change direction or altitude to minimize the turbulence you feel as a passenger. And the chances of crashing into the Pacific Ocean are almost zilch. Heck, if the storm's too big to fly around, these pilots can even turn around and make an emergency landing. Now, given these 2 choices, which plane are you getting on? At Gebhardt Group, our trend analysis is going to tell us exactly what altitude to fly your retirement plane. And if necessary, we'll put the plane on the ground and make an emergency landing if the storm's too big to fly around. In other words, we'll go to cash and avoid unnecessary market risk. But when the wind's at our back and the sky's calm, we'll throttle down, making sure your assets have the best possible chance of growing for you when you need it. At the end of the day, which strategy makes sense for your retirement savings? Predictions? Academic theories set on autopilot? Or real-time trend analysis of supply and demand, adjusting altitude and flight plans as the weather shifts? Lucky for you, this isn't rocket science or aeronautical engineering. It's retirement savings. And you can rely on prediction and theories, or you can rely on current trends and facts. It's really up to you. Albert Einstein said it best. Insanity is defined as doing the same thing over and over, expecting different results. If you want the same results as everyone else, keep doing what everyone else is doing and what the big Wall Street brokerage firms want you to do, which is sit still on autopilot, riding the market waves up and down. Or if you want different results, better results, then you need to be willing to go completely counter to the culture of Wall Street brokerage firms and embrace fact-based investing. The choice is yours now. Choose wisely.